Please give me a wave. I'll send a microphone to you. Just introduce yourself, and then I'll take your questions on the matters that we've been discussing.
Thank you very much. My name is Nanoye Ankra. I work with Asasi Radio. Honorable Minister, with the indicatives that you have presented, looking positive, as well as the mission chief, can you please give us in plain or simple terms how Ghanaians have benefited from the first tranche that came in? And then if you can also give us some key sectors that the second tranche, if approved, will the second tranche go into? Then my second question is to the mission chief. With the indicators that you have presented, are you going to review, is the fund going to review the Ghana's growth rate from the current 1.5%? Thank you.
My name is George Rafi from Joy FM, Joy News. My first question is to the mission chief. In your first visit, you spoke about seeing signs of recovery. Do I get from you now that it has been elevated to signs of stability? Because there were concerns about whether indeed there are signs of recovery or not. And when it comes to the fund, what are some of the basic benchmarks that you look and review in the economy when indeed it's recovering or it's stabilizing? If you can help me out, I'll be grateful. Again, embarking on a fiscal consolidation program comes with its own shocks. Apart from the LEAP program, what other things are you impressing on government to minimize the expected shocks that this program will come with? There is review of tariffs, there have been complaints, there have been concerns about road projects delayed and all the rest. It has impact on the society. LEAP might be just a minute section of the society. What else are you advising government to do to ensure that this progress that we are making, whilst we are seeing growth, there are some who make an argument about jobless growth. What is being done in that space? Also to the Minister of Finance as well, I want to find out from you, what progress are we making in terms of the engagement with the external creditors? Are we making some significant progress? Some will say that going into an election year will be our biggest test, having a fund program and an election year. What sort of assurance are you giving to us in terms of still being prudent with the expenditure, value for money going into an election year? Thank you.
Thank you. My name is Duke Menson Poko. I work with TV3. My first, yes, okay, thank you. Question to the mission chief. Ghana is not the only country in Africa currently under going an IMF program. If you do have the figures and you have the information, kindly share with us how favorably we are doing in comparison to other comparative African nations that are going through an IMF program. And then secondly, to the minister, taking off from where George left off in relation to our external creditors, from what the mission chief has said and from what we've read, it looks like a very key benchmark. Do we have a firm plan in place to reach that MOU with our external creditors? And will this have any impact on our economy? We've seen the impact of the DDEP and all the concerns. This benchmark that we have to meet in relation to external creditors, do we have a firm plan, and what likely impact would it have on our economy? Thank you.
Hello. I'm Maxwell Adombile, Reuters. Quick one on the issue of external creditors. I want to be clear, is there a condition precedent to the approval, the final approval by the executive board? Do we need to get an MOU with bilateral creditors for the executive board to be able to approve this review? Is that the same with the Eurobond holders? If not, what is the arrangement? And if we require that, is this similar to what is happening with Zambia? Then the issue of Afrexim loan and then the cut-off dates with the Eurobond holders. What is the status now? What is the agreement? What's the funds thinking about Afrexim's loan? And then on the DSA.
Can you take the Afrexim question again?
Are we going to add Afrexim to the debt treatment process? or not?
Which of the
The
appraisal
750
facilities?
that we took last year.
Okay.
$750 million.
Okay.
Okay. On the issue of DSA, as you've said, both sides have said, the situation has changed significantly. Exchange rate has improved, inflation has improved. These have an impact on the debt that we are using to discuss with both the OCC and then the Eurobond holders. Are we likely to see a revision of the DSA to capture the current situation? Thank you.
Thank you very much. So, Stefan, you're very popular in Ghana now. There are some of the questions that come to you. I don't think I have to go over them. So maybe you take it and then I'll go to Minister.
Thank you, Minister, and thank you, everyone. So I'll take a few of these questions. I think there was a question, first of all, about the growth rate. Our intention is not to get into the very details of the changes in projections at the current juncture, because we need to finalize everything, the assessment, and then to present it to the board. But just to give you a little bit of a perspective on where we are and how we are looking at things, the Minister mentioned that the growth performance in the first half was of the order of slightly north of 3% growth. And what we had in terms of projection for the year as a whole was 1.5%. So that gives you an idea of the difference in terms of what is actually happening on the ground and what the assumptions of the program were. And so, yes, we will revise growth up for this year, but I will come up with details and the exact number later in the future. George's questions about recovery versus stability. I think on recovery, really, the question is similar to that about, the one that I just answered about growth, really. What we are seeing in terms of growth dynamics is better than what we were anticipating. I think this is really very good news. On the stability front, I would say this is the same. Inflation is coming down. International reserves of the central bank are going up, which is also very important to bolster confidence. And so we also have the adjustment, the fiscal position. The Minister mentioned the numbers for end June that are much better also than the targets. The external position in general is stronger. The currency has become much less volatile than what Ghana has experienced at the end of last year, where it was a very, very challenging situation. So clearly, there is a turnaround, there is an improvement, and signs of macroeconomic stability are now emerging. Again, this is not the end of the road. I mean, inflation is 40%. We want to see, everyone in this room wants to see it much lower. But certainly, we are coming from a position where inflation was at 54% at the end of last year, and so the traveling direction is certainly the right one, and things are improving. A question about the LEAP program, but I think it's really a question of more generally about social interventions. And yes, social interventions and social policies are very important for the government and for the program. And the LEAP is a key focus, but you will remember that in the program we have a target, a floor on social spending, and so the goal is really to make sure that the adjustment of the budgetary position is not done at the cost of or by raising costs for the most vulnerable in the society, and that target covers not just the LEAP, which is a very important, very effective and very well-targeted program, but also for a few other social programs, including, for example, the school feeding program, which you will remember, the benefits of which you will remember were doubled in the context of the 2023 budget. And so we are looking together with the government at all of these important programs, and they are covered under the indicative target of the ECF. But generally speaking, I think it's not just about that target. It's also more broadly about interventions in the health and in the education sector. Also, not everything is included and covered in the program, but there's also lots of the government is also making significant efforts in these sectors, and I think we have to acknowledge that as well. Maybe just a reaction to the question on the use of the fund. I think the minister can say much more, but of course IMF funding has two purposes in the current environment. One is to help the central bank rebuild its reserve buffers, and the other one is to help the government finance itself at a time when the situation is quite difficult, especially when debt is being restructured. And so I think you have to think of it more from the macro angle as opposed to from an angle of IMF money financing specific programs. It's really about rebuilding reserves and allowing the government to function properly in general, not necessarily just for specific programs. On external creditors and what is needed from the IMF's perspective for us to be able to proceed with the board meeting, we mentioned it several times. We refer to it in the press release. What is really needed at this stage is what we call financing assurances. The nature of those financing assurances, you will remember at the time of the program approval, was a general commitment from the official creditors to provide relief consistent with the program parameters. We are now at the first review and we need progress, and so we're moving from a general commitment to a specific credit commitment on the terms, specific terms of the debt restructuring. And so what is needed at this stage is an agreement between the government and the OCC on those specific terms. For the external commercial creditors, based on the IMF policies, what is needed, it remains the same than what was needed at the time of the program approval, and it's just making sure that there is progress in the sense that the government continues to make good faith efforts with those external commercial creditors to reach to achieve a debt restructuring agreement that will be also consistent with the program parameters. And then finally, I won't comment on Afrexim because this is, as you know, I think I have explained that. I explained that several times. The role of the IMF is not to tell the government how to restructure the debt, but just to make sure that the debt restructuring strategy is consistent at the macro level with the program. But it is very much a sovereign decision to decide which part of the debt is included in the perimeter of the debt restructuring and how that debt will be restructured. So I won't comment on this. On the DSA itself, indeed, at each review, and this is the case systematically for all IMF-supported programs, the DSA, the numbers will be revised as we revise the macroeconomic framework. That means growth, inflation, exchange rate. All of these will be changed slightly to reflect the reality on the ground, and so the debt stability analysis will also reflect that revised macroeconomic framework. I'm going to stop here.
Thank you very much, Stefan. Great questions and for the conversation, and thank you very much for that. I think the challenge, for all of us in this very difficult time is to be able to get to some equilibrium where we don't really take things for granted, in terms of the lights being on, the amount of money we've spent in that sector to make sure that life goes on as uninterrupted as possible. And then, as Stefan mentioned, a keen eye on the social interventions to make sure that we index it and that we intervene at the right levels. So the indexation that we have put in place will make sure that we support it with issues of inflation, intervene, also increase the number of households that would be taken care of. So those are very active things that we are doing. Stefan has mentioned the issue of the growth factor. So there seems to be some resilience in the economy that we are pleased with, and will continue to support that. With regards to the specific use of the funds, also Stefan mentioned, goes on to support balance of payments and international reserves that are important, and it's budget support. So areas that require interventions, we then do that. I think, George, you mentioned that the thorny issue of growth and joblessness, and therefore specific interventions that we need with the Enclave program, the Youth Start, etc., to actually tackle those as well as we can in these difficult times. External creditors, I believe we are doing well with regards to the engagements. Expected that this coming week we might actually get a proposal for them. Our target is to be able to conclude this thing before year end, and we are pursuing it. And I think achievements of the SLA also puts pressure on coming to faster resolution. So this achievement is important towards our negotiating stance going forward. The Paris Club Common Framework, MOU, certainly France and China continue to be very supportive, and we'll engage them in the coming weeks for that. The MOU is important for the board, and so we'll make sure that we do achieve that, as they came through in May last year. The Eurobond, as Stefan mentioned, requires good faith efforts moving in the direction to reduce the impact. And I think we are all quite sanguine about where to go to make it possible. The good numbers of the exchange rate and inflation, of course, would impact the DSA. Appropriate adjustments will be made to give more space, but we still have to make sure that the debt restriction is not compromised going forward. So it's going to take the collective, common collective effort of all of us, and truly a country that is committed to moving forward, to burden share, and then other groups like the MOU from the Paris Club and the investors and IPP power producers would also fall in line to accelerate this. But in all of this, ladies and gentlemen, is the President's clarity on a growth agenda. So we've had a plethora of meetings this past month looking at a growth agenda to make sure that even with the strong recovery in terms of growth, that we'll have a program that will further enhance that. And so we look forward to all of us working, speaking the same language to move the agenda forward. Thank you.
Thank you. I'm going to come round for a final batch of questions, and then I will come to principals who are here to respond. So are there any takers? 1, 2, echo 3. George, if I don't get any takers, I'll come back to you for a follow-up. So 1, 2, 3, and then George, I'll give you the final word. That's a bonus question for you. So can I get the microphone? Echo, you would have to move to where the microphone is.
Hello, my name is Manuel Bruce from Daily Graphic. My question is to the IMF chief. Treasury bill rates are beginning to inch up again, with the 91-day Treasury bill now over 28%. Considering that this is the only market available to the governments for borrowing, does the IMF see this as a threat to the country's debt sustainability, which is a key component of the program?
My name is Nila Telate from City FM, City TV. My first two questions go to the Finance Minister. Mr. Minister, what's the state of the Financial Responsibility Act? Has it been restored? I'm asking because we know our previous engagement with the IMF has not actually dealt with, our fiscal slippages. What's the guarantee this time around as we make progress with this current, extended credit facility? And between now and when we expect the restoration of the act, what does it look like in terms of, dealing with government and discretionary, expenditure? The second one has to do with, prior to the first disbursement, we saw a number of government projects being put on hold. With our high hopes of the next tranche, are we to say that it is going to pave way for the resumption in some of these projects? Lastly, Mr. Governor, the last time we met at the MPC, you gave strong indications that the Financial Stability Fund will be operationalized. You said some modalities will be firmed up. I just want to know if these things have been done, because banks are actually looking forward to it as they try to, make some rebound over there. Thank you.
Echo.
Thank you very much. My question is to the Finance Minister. Minister, you mentioned Cocoa Board. The board has gone through a restructure, as you said, but it has also increased the farm gate price by 63%. Meanwhile, the board doesn't have money to buy the cocoa. This year, for the first time, it couldn't raise its syndication on the back of the debt issues. Now, it also owes the LBCs, the license buying companies who buy the cocoa on behalf of the board. And now the debt is piling up. Think you not that whilst you are just resolving another is also piling up? Question 2, you mentioned resilience, but the growth you have recorded have all been, I don't want to say superficial, in terms of the fact that it is services that is driving the growth. The real sectors are contracting. Industry is contracting. For like 3 consecutive months, there's been a contraction. So the growth that we are seeing, it fairly seems it's service-driven. And for an agrarian economy like ours, I wonder whether that really can be considered resilient. Can I get deeper detail? Thank you.
So we'll go for the final question, but I think we need to correct some facts. In the services constitutes part of the rail sector. And then secondly, if you look at the growth numbers, agric is also doing about 6.2. So those factual inaccuracies need to be corrected even before we respond to them. George, I'll give you the final word.
To the Minister of Finance, my question on the election-related spending and the fund program wasn't answered, so I wanted some clarity on that one. The staff is supposed to go to the board in November. From now to November, are you assured that you can close a deal with these external partners or creditors for you to be able to get the program approved by the external board? And to the Governor of the Bank, you talked about maintaining a monetary stance, quite a tight one. Does it mean that we're still going to see policy rate going up, because there are still concerns about how the tight policy again has come with some shocks for the economy? Now that we've seen inflation going down, are we going to see some easing as well? And with now passing this first review, what is the expected impact on the currency? We've seen some blips with the cedi recent times. How would this impact the local currency? Thank you.
So Stefan, again, I'll start with you. Or maybe I should start with Governor this time around. Yes. Governor, you've been on holiday this morning. Let me give you problems.
Minister, I don't know why you want to drag me into all of this. Right? Just probably to start with the last question on the direction of the monetary policy rate. I will not tell you exactly what the direction is. I think the important thing to note is that we're happy with the direction of inflation, and we are looking at staying on that path. And depending on the developments, we will take the appropriate decision. I mean, if it happens that inflation falls much faster, right? If it falls much faster than expected, then you could obviously expect that the monetary policy rate could go down. On the other hand, if it doesn't, it could also go up. So it's very, dependent on the developments in the data. And just a little clarification on the cocoa board issue. I think that they are still getting the syndication this year. It's just that the size of the syndication is going down from, I think, 1.2 to 800 million. That's it.
Stefan?
Okay, I think there was only one question for me this time around, which was about the treasury bill raise, or generally speaking, the cost at which government is financing itself at the current juncture. I think it's a very important question because we see that this is the type of question that comes back often in the press, in the media, and so I'm glad I have the opportunity to respond to this question and to say that from our side at the fund, we really have no concern about the current interest rates at which the government is financing itself. It comes as no surprise to us that interest rate would be around where they are today, slightly below 30%, because inflation is running at 40%, and the policy rate of the central bank is also, around 30. So it is no surprise, and importantly, it is fully in line with our expectations at the time we designed the program and at the time we made the projections that underpin the debt sustainability analysis. In other words, that type of cost for the government is fully consistent with the expectation and with achieving debt sustainability over the medium term.